Hello everybody, this is Lara from Pure Elliott Wave. I am going to update Cardano for you today. This is my Elliott Wave count for Cardano, and this won the last vote. I should be having a new vote next week. Sorry for the delay in the vote, but I've been pretty busy. We had quite some good waves here in Barbados, so I've been out surfing quite a lot. You've got to take it while it comes, because we'll have weeks in a row of pretty much nothing. Cardano, I see a cycle wave 1 and 2 over, with 3 underway, with primary 1 and 2 in its early stages, and primary 3 possibly beginning down here, but I'm going to leave the invalidation point all the way down here. If primary 2 continues lower, and it absolutely could, as a double zigzag, and the structure could be really good, and it could still have good proportion to primary 1. If it does continue lower, it may not move beyond the start of 1 point below 0.0161, so that's the risk for this wave count at this time frame. If it's over here though, it's a 93.1% correction of primary 1, so it certainly is deep enough. It doesn't need to have a subsequent zigzag to make the correction deeper. That's the purpose of multiple zigzags. Each subsequent zigzag exists to deepen the correction when the first zigzag doesn't move price deep enough. So in this instance, it just doesn't need it. And this is a really normal depth for a big second wave for a cryptocurrency, over 90%. It doesn't look as deep as that, but that's the arithmetic calculation, and it doesn't look as deep because of the scale. It's a semi-log scale. So if cycle 2 is over there, cycle 3 may only subdivide as an impulse. Within it, primary 3 may only subdivide as an impulse. If primary 3 exhibits the same ratio to primary 1 as intermediate 3 did to intermediate 1 within primary 1, then primary 3 at 18.57 times the length of primary 1 would reach a target at 57.49. I'm not going to use that target for my own purposes for investing. I bought some Cardano quite a while ago. I'm not going to use that target. I'm just putting it out there as a potential ballpark figure. It's an idea of what's possible for this market, given its previous price history. Let's take a look at the weekly chart. I think we're going to look at most of primary 2, the high here of primary 1. Yeah, here's primary 1, here's primary 2. I've checked the subdivisions of this on the daily chart, and it does fit. I'm drawing an Elliott channel around primary 2. That's the biggest takeaway from this chart. Draw it from this high to this high, place a parallel copy on this low. Price is finding resistance. It still remains within that channel. If this channel is breached by upward movement, and we don't see a new low below the end of primary 2 before that happens, and we see a breach of this channel by upward movement, look out for a pullback to test support, and then look for price to move up and away. If that happens, then I'll have some reasonable confidence primary 2 is over, and I'll pull the invalidation point up to here. For now though, price remains within the channel, so this is the risk on the weekly chart as well, 0.0161. Let's check the daily chart for the structure of minor 1 and 2, because there's some problems in here. In terms of Elliott Wave, minor 1, short, minor 2, and expanded flat, A, B, C. The subdivisions fit, and from this low to this high, seeing this as a zigzag with a triangle in here for minuet B, has a really good fit. That's the good part about this wave count. The bad part is the length of minute B in relation to A. It's nearly 3 times the length of A. Now this does not violate any Elliott Wave rules. There are actually no rules stating a limit for B waves within flat corrections, but there's a convention within Elliott Wave. When your B wave is longer than twice the length of your A wave, the probability of a flat unfolding seriously reduces, and you should try and find a better wave count. I haven't, because I can't. This is the best fit. I will have to redo this wave count if we see a new low below 0.22902. So the risk on the daily chart is really close by, but I don't have confidence that this low is in place while price remains within this channel and continues to find resistance at this trend line. I want to see this trend line breached with a full daily candlestick above and not touching this trend line of green upward movement in order to have confidence in this daily chart. Until that happens, this chart comes with a very strong caveat. I do not have confidence. We certainly could see this invalidation point breached. I want to see the channel breached first. If that happens, then I will expect a third wave up, as in its really early stages. Weekly technicals for Cardano. There's strong support at 24 cents, resistance at 40 cents. It's essentially moving sideways in that rather narrow range. So price has been consolidating since about October 2022. So nearly a whole year, it's just been moving essentially sideways. There is, however, a series of lower lows and lower highs, the basic definition of a downward trend. This is the last low. Prior to the last low, this is the prior swing high. So in order for that series of lower lows and lower highs to be broken, we need to see a new high above 0.4622. If we see a new low below this point, then we can bring that confidence point down to the last swing low here. But as this is still the last low, this is the last swing high. A new high above this price point would break that series of lower lows and lower highs, the downward trend, and then we could have a little confidence that the trend may have changed and it may be upward. That would also see a breach of that Elliott Wave channel on the weekly and daily charts. Volume is declining as price moves sideways. Interest has really dropped off while prices are low. Funny that. It's exactly when you should be buying, when prices are low. Now, this is not investment or trading advice, but I have bought some Cardano when prices were relatively low, and I could consider buying a little bit more if I wasn't fully loaded up on crypto and I don't really want to add any more to my portfolio. But I might consider just a little bit because prices are relatively low. On balance, volume gave a bearish signal on the 6th of August. That certainly could have seen some follow through. Prices moved lower since then, so no new signal, no new range. ADX is at a really low level. I love to see this. When ADX comes up from really low levels like this and rises up from below both DX lines, it gives us a really strong signal. It's currently declining, indicating no clear trend. But let's see if it can start to rise up and reach 15. And it has a positive slope, the black ADX line. If that happens, it's going to give us a really strong signal. So Cardano is setting up for a beautifully strong signal from ADX. That's the strongest signal it can give. So keep an eye on ADX. If it reaches 15 with a positive slope, it's telling us there's a new trend in a very early stage. Whichever DX line is on top at that stage tells us the direction of the trend. There's bullish divergence between price and RSI at the last low after RSI reached oversold on the weekly chart. So give this a little bit of wait. If we can see that trend channel breached on my Elliott Wave count, then I'd have a reasonable confidence Cardano's finally found a low. There isn't any between price and money flow at this time frame. ATR is really low. It's so light, and that's pretty typical of ATR, and volume tend to follow price. When price moves higher, particularly when it makes new all-time highs, these markets tend to make headlines in the news, and volume follows price. ATR also, range, follows price. When price is really low, interest is declining. It doesn't make the news, and if it does, it's bad news. Volume declines and is very light, and range declines. That's really typical around lows for these markets. Stochastics is here for a consolidating market. The market is consolidating. Stochastics is nearing oversold. Price is very close to support. I'll expect the end of a downward swing here or very soon, and the start of an upward swing using that model of stochastics plus support and resistance. Daily technicals, adding in some moving averages. They are full bore bearish. The short term is below the mid term, which is below the long term. There was a death cross back here. Price has moved lower since then, although it hasn't made a lower low. Very bullish long lower wick here. No bullish candlestick pattern at this low. Could possibly be seeing a bullish piercing pattern unfolding for the 12th of September. We need to see how that closes though. There's bullish divergence between price on a closing basis between these lows and between RSI. We'll get to that next. Volume pushing price lower, but overall volume declining. For the very short term, the volume profile looks bearish, but we don't have the close of the 12th of September yet. If that closes with stronger volume, then I would see that as a very, very bullish signal. It looks unlikely though, however. It's after 4 in the afternoon, so it's probably not going to do it. The last signal from on balance volume on the daily chart also was bearish. This was given on the 10th of September. We saw a follow through on the 11th of September. That may be all we get from that signal. At the daily time frame, ADX is increasing, telling us there's a downward trend. It's nowhere near extreme. RSI is oversold. It has this longer term strong bullish divergence after RSI reached deeply oversold. If we see a pivot form here for the 11th of September, then we would have double bullish divergence after RSI reached oversold. That would start to be getting, along with some bullishness in the weekly chart, we'd start to be getting quite a lot of bullishness in technicals if that happens, but wait for a pivot to develop. So the 12th of September, a green candlestick. If the 13th of September moves higher, then I would say we've got a pivot on the 11th of September. Then I would take into account this potential divergence. I don't like to do it prior to a pivot developing, because if you do that, I've found by learned experience over many years, that's when divergence can just disappear. Wait for the pivot in price and the pivot in RSI to be develop, and then look for your divergence. It narrows down or removes some of those divergence instances that appear and then just disappear and don't give a decent signal. And range really light and declining as price moves lower. So the biggest thing I want to see for Cardano is a breach of this Elliott channel, and then I'll be looking for bullish candlestick patterns. I'll be looking for push from volume to see price moving higher. I'll be looking for pivots forming and bullish divergence between price and RSI, and then I'll be looking for ADX to give us a signal. And if all that lines up, then we could see Cardano having quite a lot of confidence that a low may be in place back down here in June 2023. That's it from me with your Cardano update. If you liked this analysis and you're using Bitcoin for your investing, then I analyze that once a week, every Monday, with this kind of format, but a little bit more in depth and a little bit more methodical than what I've done here for you. I'm doing that every Monday on my website, pureelliottwave.com. So click on the links below and check it out.